Hello and welcome back. This is David from the Personal Finance Squad. We are in exercise 6 of creating the budget, auto insurance. Now, if you drive a car, you have to have insurance. And so we've talked about this in the book, of course, and we know that thing with auto insurance is that the rates can fluctuate, and depending on where you live, there could be several reasons why your payment could be different than somebody who could border a county or a city. There are many factors, so it's very important to really get a handle on what coverage you have, what coverage you need, and of course, like anything else, paying a good price for what your service is going to provide. What we want to do here is make sure that you, although you have insurance more than likely, make sure that you go back and scrub the numbers and look at some companies if you have not done so in a while to see if you can, again, improve your pay for the quality that you're receiving. So what we put in here is a link, and you can see it's 360financialliteracy.org. Now, there might be other sites as well. You can simply search if you want on your own, but what it says is minimum coverage required by state. So that would give you a gauge of the kind of thing you need to put on the car that you own or cars that you own. And this is what you want to talk about with your representative on the phone when you call. What we want to point out is that we feel that you should call at least 3 carriers to get price comparisons. And just about anything you do, you should call 3. You could call, in my case, I've called up to 6 depending, just to get a good gauge. So it's up to you, but the more you try it, you'll probably get to a point where you really understand what something is really starting to cost generally, but they certainly can differ between companies. You'll know what you need to do, but do at least 3. So here's some things down here that you need to consider while you're talking to these folks. You can see gap insurance. Gap insurance provides the difference in the value of the car in case it's like stolen. So if the value of the car is 24 but you owe 28 on it, they'll cover that difference of the $4,000. That's usually a small number on your policy, but you don't have to choose it. Some common ones though are certainly roadside assistance. You certainly want to have towing built in there, or someone to come and start your car in case you can't do it on the side of the road. Car rental is another one. It's really useful for when your car is in the body shop, so you don't have to go rent one on your own. Obviously, collision and comprehensive, the deductible amount. The higher the deductible you pay, the lower your premium will be. But in a lot of cases, the premium itself doesn't change that much if you go between $1,000 or $500. But again, always check. Miles driven to work each year in total miles. One way to work is a common question. They want to know the kind of wear and tear you're putting on that car. They want to know really how much are you on the road, because that can change the value of the vehicle if you're driving a lot of miles, and also the odds of you getting into an accident or infraction, because the more you drive, the more that possibility exists just by pure math. Do not assign cars to younger drivers if possible. What we're saying here is that it depends on the company, is to say, well, I have 3 cars and I have 2 kids. And what you do is you assign the cars to the parents. So car 1 and 2 could be to me, car 3 could be to my wife, and the other 2 kids are just drivers. They're not primary. And that will help you reduce rates, because the younger that somebody is, the more it costs to insure them. Multi-car discounts. If you have more than 1 car, you're going to get a premium reduction for that. Typically, it's in the neighborhood of 10%. And also with home ownership, sometimes they call it hazard insurance, is that if you put insurance through them and the auto, that can also get you in the neighborhood of 10% savings on the auto policy and the home ownership. Again, these are ways to get the money down for what you're paying on your premium. And then there's general discounts, and they have several of them. So you can see seatbelts are common. Most cars have an alarm, and newer cars do in the last so many years. Where you went to school. But there's several discounts. You should ask for all that they have and see how many of those apply to you. Now, it doesn't mean they won't tell you about them when you're getting quoted, but your job should be to ask that stuff, because sometimes it just doesn't come up and you need to take care of yourself, not rely on them to give you that information. Okay, so a little bit down here is going to finish up this exercise. And what we want to do here is look at the grid below, and this is a great tool for you to just jot something down here and get a gauge of what it's going to cost you per the carrier. When you write things down, it's much easier to see visually, and this is just some standard information in here, like carrier, the premium, the term, In full discount is if you pay everything in full, they usually give you, they could give you a 10% discount on that as well. They want their money up front and they have it in their pocket, they're going to pay you for it. So car rental, of course, roadside, things that matter to you, you should really, in your grid, put the things you want, and you can certainly add more to this if it appeals to you. You can see that this is going to take you a little work and a little time, but it should pay off for you in the end. And if you find out that where you are now is a better way to stay, then that's what you do. But you need to go do this, say, on a yearly basis. Some people will tell you 6 months, but it is a lot of time out of your life. Once you get down to the answer you want, then of course, then you need to go run the 12-month budget exercise. And again, that is to predict out depending on when the payment is. So it's not a monthly payment, and it's maybe they give you 5 months and 1 month off, or maybe they want it in full, or maybe they make you pay 6 months in full, or they charge you quarterly, whatever that may be. You're going to have to go run this here if it applies to make sure that you have the upfront cash to pay for it. So more than likely you won't have to do this, but it does happen in some cases. There are some companies who want all the payment in full. So again, work it out with what you need and what works for you, and then you will have this all buttoned up on this part of the budget. Okay, so thanks for joining, and we will see you in the next video.